I'm Safie Russell from SDR Consulting, Inc., and we're here today on Business Basics Friday. The goal of this session is to provide some value to small business owners in the space of tax, accounting, and general business, and then have an open Q&A at the end.
Hello, everyone. Welcome to Business Basics Friday. Hope you're having a great Friday. It is Friday, the 28th of October, and today is 55 degrees here in New York. So hopefully it is warmer where you are. And welcome again, and feel free to put in the comments below if you're here live where you're joining us from, or even if you're watching the replay, where you're tuning in from, so we can kind of see where everyone is. So welcome to Business Basics Friday. I'm Safietou Russell, founder and CEO of SDR Consulting, Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners. We have a variety of guest speakers to come in and share information and educate you on the many areas of your business that you may need to manage. This is strictly for education and informational purposes only. No client relationship is being established here. We are not liable for any use of information provided today, but definitely feel free to schedule a consultation for your specific situation. As far as my background, I've been in the industry 20 years, and I'm a CPA and enrolled agent, and also have a master's in taxation. SDR Consulting, Inc. is a virtual firm based here in New York, but we do service clients all over the US. And we mostly work with business owners, especially those in the mental health profession, really to help you reduce your concerns regarding tax and accounting so you can focus on your clients and your own well-being and growing your practice. So today, if you have questions, feel free to post them in the comments, whether you're here on Facebook or listening in on Clubhouse, and we will go over them at the end. And so today I'm honored to introduce our guest speaker. I want to thank her for taking the time out to meet with us today and cover the topic of small business cash flow. So let's please welcome Jennie Schottmiller. Welcome, Jennie.
Thank you so much. I'm really glad to be here. And I do the same thing. I love helping business owners understand the basics so that they aren't concerned, alleviate some of that difficulty and that stress, so that it's just I know what I need to do and I'm capable of doing it. And I feel very strongly that most small business owners are capable, even if they don't necessarily feel it yet in their gut. I'm a CPA and a licensed marriage and family therapist, so I wear a couple of different hats, which I really enjoy. And I'm going to go through a couple things about small business cash flow management so that you know what it is. And if you don't already have a process around it, that you can start to formulate a process around it and get some ideas of what it might look like for you. So the first thing I want to cover is, what is cash flow management? What do we mean when we're saying that? And to me, cash flow management is a process and a plan. It's kind of both. It's a way to know what cash you have in your business, what to do with the cash now that you have it, and then what cash needs you will have in the future so that you'll be prepared for them. It can be a quick and easy process for many small business owners, or more in depth if you need it. And to me, that's really important, that when we say, oh, you're going to develop a cash flow management plan or a process, we're not saying you need to dedicate 5 hours a week to developing reports and creating things and analyzing things that feel way, way out of your league. That's not what we're talking about. In many cases, the cash we're talking about is cash you earned when you saw your clients, and expenses that you pay the bills for, and profit that is yours to be distributed or paid to you, depending on your form of business. So what are the components? So the components of a cash management process or plan is, first, your banking. So we'll talk a little bit about having a banking setup that works for you and your business. A plan, which is an idea of what you need on a daily, monthly, quarterly, or annual basis, personally and professionally. And then a process, so that you know what reports to use, how often to review, how to evaluate and maintain a regular schedule of review and decision making. Because ultimately, what cash flow management is information. You getting information, and when you have that information, you being able to use it to make valuable, value-added decisions. So what are the concerns that a lot of people might be having as we're beginning this discussion, or generally when they're on their own doing this? One is feeling worried without knowing exactly what is an actual potential or unlikely concern. So if you have an actual concern, I don't have enough cash to cover my upcoming payroll, that's a real problem. And that needs to have, something done to address that problem. There's also could be a potential problem, like I might not have enough money to take the vacation that I need to take for my own mental health, and I need to do something about that. Maybe I will, maybe I won't, I'm not really sure. And then there's also the unlikely concerns that we have. So we can be worried that we are going to have a cash flow problem when we actually don't have a cash flow problem, because we just don't have access to the information and the ability to interpret it. And so we can't alleviate our own concerns. But when we have all of the information, then we can identify what is an actual concern, what is a potential concern that I might want to plan and prepare for, but it might not actually need to be addressed. It might turn out okay. And what is an unlikely concern, so that I can alleviate the unlikely concerns. I can, have them on my radar. I can be watching, but if they're very unlikely, I'm not going to have to spend a lot of time worrying about them because they're unlikely. The other concern that a lot of small business owners have, especially mental health professionals and people who have small businesses that are just don't have a business background or business education, and maybe feel that they're not super good with numbers, is not knowing where to start to develop a process. So hopefully we're going to make some progress in helping you know where to start as we go through this today. And then the other is having a process that you can maintain and enjoy. And I specifically put the word enjoy in there because you can enjoy this process. If you develop a process that works for you in your business, that takes perhaps 5 or 10 minutes to complete, that gives you the information you need to be empowered to make really good decisions, then you can enjoy, and probably will enjoy, the process. So that's something we want to change from actually concern to reality, is a process that you can maintain and enjoy, simple process that works for you. It's really important to know that mistakes are okay. It doesn't matter what's happened in the past. It's about what you're going to do now and into the future, and that avoiding it makes it worse. And we know that a lot of things in our lives work this way, that we're afraid of it, so we avoid it so that it gets worse. And then we're afraid of it and we avoid it and it gets worse. And it gets to such a big point that then solving the problem becomes a lot more difficult. But mistakes are okay. So it's all right if you're doing it and you fumble through it. It's all right if you're doing it and you aren't really sure if you're doing it correctly. It's all right if you're doing it and it's not the ultimate process you're going to end up with because you're just figuring it out. Those are okay, and they need to be okay, because otherwise we will avoid it. So a question you might want to ask yourself or write down is, what would you like the process of managing your cash flow to look like? Is it important to you that it's a very simple, quick, and easy process? It is important to you that you are planning for your retirement and looking 30 years ahead. What matters to you, and what would you like the process to look like for yourself? Do you want to do this independently? Do you want to do this in connection with a professional that's helping you out? What do you want this process to look like? That is going to help formulate and solidify your process as you start to develop it. So I want to start with the banking setup, because the banking setup is where the bank is where our cash is, or the credit card is where we owe money and where we're charging things. So we want to have a banking setup that works for us. There are a lot of different options and ways that you can do this. I personally think it's a good start. I mean, you need a business checking. Bottom line, you need a business checking if you have a business. But I think it's very helpful to have a combination checking, savings, and credit card. The credit card is valuable because you can make online purchases without worrying about your debit card or your checking account where all the cash is sitting being compromised. And the savings account is helpful to set aside some money for future needs and just separate it out from the checking, where checking money is coming in and out, in and out, in and out, in and out. But savings is money that's set aside. And the credit card is just for online security, can be helpful not to run up a lot of debt. It's a really good plan if you have a credit card for your business, just to charge the things that are your regular monthly expenses and you just pay it off every month to minimize the costs. So the basic option, basic is checking, but the next step would be checking, savings, and credit card combination. So establishing those three. However, some businesses and business owners find that it is a little bit better to have a couple extra accounts. For example, a main checking, but then a payroll checking where I move the money over and then I pay the payroll out of there. So I know I've got, 1 or 2 payrolls always set aside in cash, then a savings and a credit card. Some would like to have a couple savings. For example, you could have a checking and then a savings for your tax payments and a savings just for general things. And then if you've heard of Profit First, most people have, that method recommends having 5 accounts. You have an income account where all the money comes in, an operating expense account where all the bills are paid from, an owner's pay account, which is your money that's going to eventually go to you, an owner's profit account, which is your money that's going to eventually go to you at a fewer intervals. So like quarterly. So the owner's pay might go to you every 2 weeks and the owner's profit might go to you quarterly, just to set up kind of a bonus structure for yourself. And then a tax savings account. You can pick 3 of those. Some people have more than 5, but it really needs to be the setup that works for you. And one of the ways that you know that the setup is working for you is that it works well with how your brain thinks about your cash and how your brain buckets your cash. So if you have accounts set up in the same way that your brain thinks about and buckets cash for your business, it's probably going to be a good banking setup. So a question to ask yourself, write down and maybe come back to it, is how many and what type of bank accounts will serve me best right now? It can be changed later. So back to the mistakes are okay. And also having an evolution of a process is okay. So if you need simple right now, then maybe you just have a checking and a savings or a checking and a credit card. Set it up the way that you want right now. And then ask yourself this question maybe every year. What's the setup that will work for me? So then we want to have some goals, because part of a cash management plan is we want to know what we're managing to and what we want to achieve. So some business goals that you might have for yourself, don't take these as you have to have these goals, because everybody's goals are unique to them and your goals are actually better when they are customized to you. So, but some examples of some business goals might be, my business goal is to hire people and grow my business so I have greater revenue and profit. To increase my revenue per client so that I can make the same amount of money, I can make more money working the same, or so that I could work less. Or maybe one of my goals is to decrease expenses. If I started my business out and I was spending a lot of money for training, mental health professionals love to spend money on training, but maybe I'm established and I need to get out of the habit of spending as much on training. And maybe I want to spend money in another area of developing my skills, or maybe I want to have more profit, or just to reach a profit target as your business is growing or over time. Generally we do increase our fees over time and generally we do become more efficient. And so maybe my goal is I made $85,000 this year and my goal is to have $100,000 of profit next year. We also want to consider our personal goals because they matter. What are we doing this for? We're doing this for ourselves, for our families, for our lifestyle, for our future. And so some of the personal goals we might want to think about when we're looking at our cash management is, do I have enough money for expenses so that my business feels very secure? Saving for my own retirement and taking time off, planning for vacations. Those could be some personal goals that I have. And so I want a cash management plan, goal, and process that supports the end personal goals as well. So specifically around owner pay, this one can be tricky and a bit confusing for people, especially because there's so many different factors to consider. And I'm not going to get into, if you're self-employed, you take owner's draws, and if you're an S Corp, you will have distributions as well as a W-2 salary. That's a whole presentation of itself. But I would recommend that you do not haphazardly pay yourself whenever you need it from your business. That can be fine when you're starting out. It can be fine to pay yourself a little bit extra when you do need it occasionally. But it is easier to manage your cash flow when you create a schedule for your owner's pay. It can be adjusted if needed, but have a plan. I pay myself every Friday. I pay myself once a month on the 15th of the month. I want to pay myself every other week. Think about how it will benefit you on the personal side to be paid, and then set up the plan for your business to pay yourself in that way. If you can't do it right now because of starting out and not having enough cash flow, then just have this be a goal. But our personal expenses don't tend to fluctuate or come up as often. They just don't tend to be as variable as our business revenue. So especially in the mental health field, we have kind of some seasonality to our businesses, and we can have certain times of the year we take off, or we're maybe doing more training. And, so there's a lot of factors that can say like, oh, I had a good month, or oh, I had a bad month. But if we can have a real consistent way of paying ourselves. So if I have a good month in my business, I just put a little bit more into my business savings, so that when I have a bad month or a lower month in my business, or I take some time off, I've got a little bit of extra cash from one of those good months that I saved, so that I have a real level, even predictable, sustainable, and just strong structural pay for myself. Just consistent pay to myself can be really good on the personal side. Set a goal for how much you'll be able to take. It doesn't have to be, the goal could be a little higher than where you are right now. Say, okay, well, right now I can take out $4,000 a month, but I really want to get to $5,000 a month. And having that in your mind is really helpful when you're thinking about other decisions that you're going to be making around your cash flow. And plan for paid time off. So one of the biggest complaints I hear from small business owners is, well, I don't get PTO anymore. When I work for someone, I got PTO, and now I work for myself, I never get PTO. If you think about how an employee gets PTO, what happened was the business set aside a little money so they could pay you when you weren't working. And you are just as capable of doing that as any former employer was. What it entails is taking a little money when you have extra and setting it aside so that when you aren't working for a week, you can still pay yourself. So plan for paid time off and have that be a goal of your owner's pay. Ask yourself, what goals? This is a question for yourself. Write down, maybe come back to this periodically. What goals matter to me most? If I am just starting out and I'm 25, my goals are going to look different than if I'm 55 and I want to retire in 10 years or 5 years or 20 years, whatever my goal is. So what goals matter to me most? That question is going to help you as you're going through this process. So when we're looking at the cash management plan and a process that you're developing, you're going to need to look at some reports. And the more you look at them, the more familiar you will become with them, and the easier it will be to look at them. So I'm going to give you an idea of where you might go to get these reports and what they might be. And if you get these reports, at least the ones I'm talking about today, it's a good start. This is a great start, and this might be all you ever need. So the first is your bank statement or register. If you use an accounting software, then your bank statement is also recorded in the accounting software in a register. So you could look at the register or the bank statement. I like looking at the bank statement initially when you're just starting out, because it shows you the starting balance, the deposits, and the withdrawals. And the deposits are, for the most part, going to be the money you earn from clients or insurances. Sometimes if you had to put money into the business, that might be a deposit. And the withdrawals are pretty much going to be your expenses and the money you paid to yourself. So that is a good place to see that, what happened this last month. The next is the profit and loss by month report. And I always recommend getting a profit and loss by month report. And certain softwares have this built in, and some you might need to download from your accounting software to be able to get it. But profit and loss report shows you the revenues at the top of the report, and then the detail of your expenses by category. And at the bottom, it shows you your profit. So this doesn't tell you how much cash you have in the bank. The bank statement did that. But the profit and loss tells you what came in and what went out and what was left in by month. And when you have it by month, it is a lot more digestible than if you're looking at, it's October, so I'm seeing January through October almost into one column. It's a lot harder to make sense of what came in where and when you have a bunch of months all in one column. So look for a profit and loss by month report, or download it into a spreadsheet and have one column for January, February, March, April, and then the total, because you'll see when did my money come in. And especially if your business has some seasonality to it, if you see school children and you know that, in the summer, everyone's happy and on vacation. And in September, nobody's really having too much struggle yet. And October really starts kicking up. When you have your profit and loss by month report, then you see where those variations are, because the variations in your revenue might not be the same as your variations in expenses. You might have actually more expenses in the summer when you're taking some additional trainings because you don't have as many clients, but your revenue isn't high as much in the summer, perhaps. And so seeing how they relate to each other is really helpful. And in the mental health field, that we look a lot at relationships and interconnected parts and systems. And that's what we're looking at with our numbers too. Don't even think of them as numbers, just think of them as information, and how I want to understand how it relates to each other. So I'm going to have less profit in the summer if that's when my expenses are high and my revenue's low. Okay, good. I understand that. I can now plan for that. The balance sheet, if you have an accounting system that does a balance sheet, that's always good to look at. And it shows you what your cash is, any debt that you have at a given point in time. That can be useful. And then the other thing is any reports from your client management system. So your EHR, your EMR reports that show you how many sessions you had, who paid, is there anyone not paying? Those kinds of things can be really useful. And every EHR, EMR has different kinds of reports. So that's, go in there, play around with reports, see what they say. Try to look and see if you can figure out if they're accurate and reliable or not. And then see if they can also be downloaded into a spreadsheet. If you need to sort things and sort by private pay and insurance and things like that. Once you have the reports, you have pretty much most of the information that you're going to need to do some analysis and make some decisions. So when we think about cash management, we often say cash sources and cash uses. Cash sources are, where did your money come from? It's super, super helpful to know where your money came from in some way, shape, or form, but there's different ways you can slice and dice it. One would be to track where you got your clients from. So did they come from social media or Google ads or Facebook ads or my website, or referrals offline, client referrals, other therapist referrals? Tracking that can be really helpful. Not everyone has to do that. It's not a requirement, but think about your business and whether or not that would be useful to know where your money's coming from. The other is, I often recommend, if you're using especially accounting software, but even a spreadsheet, to split up your revenue by type. So having on your profit and loss, having private pay clients or co-pays split out from insurances, and for insurances, having a revenue for each insurance. So Aetna, Blue Cross, Cigna, an EAP. And then if you do any other side gig things in the same business, such as supervision or workshop revenue, having that be separated out. So you can see right on your profit and loss where your cash is coming, where your revenue is coming from. It can also be just really helpful in managing your business and making decisions about, should I stay on this panel? Do I need to get more private pay clients? Hey, wait a second. All of a sudden, one of my insurance payers dipped down. Maybe I have a billing problem. So that can be really, really helpful. And then cash uses. I really like turning my financial numbers into a graph, into a picture. If you don't know how to do that, I'm not going to cover it today, but learning how to use a spreadsheet and create some graphs is really helpful. I'm very visual, and being able to see in like a pie chart or some other kind of chart, where did your revenue go? I often do this at just like creating a little list of percentages for people. And it's fascinating when you see, where did your revenue go? So let's say you got $1,000 in, and 200 of it went to operating expenses, and then 800 was left, but of that 300 went to taxes. So being able to say, oh, okay, I see that, I got $1,000 and 200 went over here to pay the bills, and then 300 went to taxes, and 500 was left for me. Okay, then that's great information. Whether I have it in a chart or I just have the percentages, am I going to do the same thing next month? What's it going to look like the next month? Being able to track those percentages over time, it could be quarterly, but a monthly is also nice, to see how is something getting off track, Is this a good percentage? Do I want it to be 600 goes to me and only 100 goes to expenses, which also might change the amount that needs to go to taxes. But I can use that in my planning and in my process. It's information, and it can help me either feel good or know that I need to make a change. So a question to ask yourself, write this down, maybe come back to it later, is what do you wish you knew about your business sources and uses of cash? Because what you wish you knew, you can probably find out. And if you find out, then that can become a regular report that you look at. You might need to create it. You might need to create it in a spreadsheet. You might need to download a couple of different pieces of information from your EHR, for example, and then create, kind of a list or a report for yourself so that you have that. But if you know what you wish you would know, you wish you knew, then you can create it. So let's talk a little bit about the process. So the process for managing your cash flow would look a little bit like this. It's going to be different for everyone. I really want to make the point that this is a customized, individualized process for you, the business owner. So it should fit with how you work. I recommend checking your cash balances daily or weekly. It doesn't have to be daily. It could be monthly, but at least I think weekly is a good, daily or weekly is good because it lets you know if there's a problem. And this can be 2 seconds. You log in, you look, okay, I'm okay. Or you log in and you, maybe put something on a report and start tracking something. But keeping an eye on it is really important. We all know that most of us have some kind of money stuff that we have to deal with, but no amount of dealing with our past money trauma and issues is going to tell us what we actually have in the bank. And we need to know what we actually have in the bank. Looking at the accounting reports, weekly or monthly, that doesn't have to be daily, to see how much revenue, where did it come from? What expenses did we have? And are they fluctuating? And then what is the profit? So we can see, I really like knowing, and I find it very empowering to know in the middle of the month, how much did I make so far this month? Because then I can kind of guess what I'm going to make by the end of the month if I know what I've made in the middle of the month. So looking at your accounting reports weekly or monthly to see where you are standing. And that doesn't necessarily have to only come from your accounting system. If you rely and you know that they are reliable, some information from your EHR, you could look at your EHR reports. Some EHRs do not have super reliable reports. So accounting reports are going to show what happened in the bank. You could also use some bank statements to look and see what came in and went out. Consider your current expenses and upcoming expenses. And what I mean by that, and I mean really just consider them. So you're looking at, let's say you're looking at your profit and loss by month, and you can see what your expenses are for September. Look at them and say, oh, wow, okay, so September was a little bit higher than August and July. All right, that makes sense. I know why. I can see why it's higher. I spent a little more on training, for example. But okay, you know what? I don't really have any new trainings coming up and that I'm going to sign up for until March. So yep, that's not going to be a problem ongoing. Just looking at them and saying, hey, how are they fluctuating? What's going on here? Does it make sense to me? And do I need to do anything about it? If I notice that, oh, wow, my expenses are really high, and that's because I hired someone, oops, I might have actually agreed to pay them a little more than I can afford. Now I'm going to have a different decision-making process around that because, oh, I better get my revenue up because I'm not going to be able to just pay them less than I promised. I'm going to have to maybe cut some other expenses. So looking at what they are and then considering, does this mean anything for me? Do I need to do anything now? Does this give me a good feeling, a bad feeling? And then some analytics. We often call these key performance indicators or KPIs. When you hear about KPIs, often they're in terms of larger businesses and more complex analysis. But for your small business, it might be a really simple analysis, like just looking at the percent of revenue that went to your overhead costs. Or if you have employees, what percentage of your revenue went to payroll? And is that percentage staying consistent or creeping up, which could indicate a future cash flow problem? Or looking at my actual expenses versus the prior month or my average. I'm averaging $1,000 a month in expenses. In September, I had $1,500 a month for the expenses that month. So, okay, what does that mean? Oh, you know what? That's fine. I had a little extra in savings to set aside for the additional costs. I'm fine. Or, oh, wow, I rented a new place and the rent is higher and now I'm going to need to make some other changes. So just looking at them, having the reports, looking at the reports, making decisions from the reports. So on the topic of making decisions, now that you've gathered information, you can then, this is the benefit of having the information, is now you can make decisions with it. So how much am I going to pay myself might be a question that you ask yourself after looking at this information. Do I need to increase my business savings? Oh, I'm starting to spend a little more on training. Or you know what, now that I think about it, I'm going to take this big vacation in January. Do I need to increase my business savings to pay myself more later, or to cover some upcoming bills? Would it help to increase my fees or spend less? We tend to, raise fees for clients over time, but as a profession, mental health professionals aren't super great at doing that on a regular basis. So we could have it go along for a few years and not raise our fees. But when we're really looking at our cash flow, it might highlight that, over time, my expenses have gone up and my revenue is not. And so I don't really want to work more. I better raise my fees. And then how much can I add to my retirement now that I see where my cash flow stands and I see how much is going to profit for me, taxes on my behalf, and operating expenses to run the business? How much of that profit can I add to retirement? How much do I need for my own personal living expenses, and how much can be saved for my future? And then maybe even if I raise my fees, how much extra could I put in my retirement? So action step, a call to action here: spend some time designing the process you want so that you like it. Ask for help if you need it. If you get stuck, if you're not sure what report would be best or what the report means, ask for help, and then implement it and maintain the process on a weekly or monthly basis. So depending on you, your brain, whether you're using a bookkeeper or doing your own bookkeeping, figure out the schedule that's going to work, and then do this on a weekly, monthly basis. Even if at first all you're going to do is open up your bank account and look at how much cash you have and make a note of it. Even if you're just only going to spend 5 minutes at first, do something and then allow the process to develop over time, because you're now setting aside time and doing it regularly. A couple tips I want to cover for just to help think about the process so it makes sense. If it makes sense and you think you're going to like it, you're more likely to do it. So here's some tips. One is see the link, see the interconnectedness of all of this information that you're looking at. So you've got your cash balances, and you've got some reports from your EHR, and you've got an accounting profit and loss by month report. And when you look at all that, ask yourself some questions and see how things are related. So some examples of doing this, and this might not be the exact questions you ask yourself. If I grow my business, will I have enough time for my family? So if I want to take my practice from a solo practice to a group practice, will I have enough time for my family, or is that going to cause me to do so much more admin work? And so then, okay, I don't want to take away time from my family. I'm definitely going to have to hire an admin person to be able to do this. What's that going to cost me? What's that going to do to my cash flow? If I increase my fees, can I take time off, more time off? Can I save more if I increase my fees? It's hard sometimes to go to our clients and say my fees are going up, especially when we're treating people who are struggling. But if I do that, a lot of us have clients who can afford it and can then, is there a benefit? If I can see the benefit for the reasonableness and the benefit of it, then I'm more likely to do it. And if I spend less on office expenses, could I spend more on training? So if I have a set amount that I can really afford to spend on expenses because I know how much I need for my personal living expenses, and I just raised my fees, so that's not going to go up again for a little while, how do I want that expense allocation to go? One of the things I often see happen in mental health practices with cash flow is if we don't take the time to figure out how much to pay someone when we hire them at first, then it has a direct impact on our profit. And sometimes people will start a group practice and overdo the expenses, overpay the employees, and end up actually making less than they would have if they just worked on their own. Now, it doesn't happen all the time, but it does happen sometimes. And so really seeing how all of these link together. Okay, so if I hire someone, then they're going to bring this much into the practice. I'm going to pay them X. how much is going to be left for me, and how much is going to be covering the additional expenses I have of having employees, like time to have staff meetings and the cost of food for the meetings and the additional training, because I don't want to have untrained employees. I want to make sure they can get all their CEUs. So I'm going to have some additional training expenses. If I follow through and I have all the pieces of information, I can make a much better decision, and I'll have a good idea of how it's going to impact me in the end. So seeing the links, seeing the interconnectedness of all this financial information. Another tip is create reports. It's really valuable to have some spreadsheet skills as a business owner. If you can download some stuff from your bank and download some stuff from your EHR and then sort it the way that you need to, or create a graph from that information. So we kind of have a picture, and I have a pie chart, and it says, okay, look, I can see how many of my, clients were insurance versus cash. And my goal was to have more private pay clients and fewer insurance clients. And now, oh, this new graph, it's showing me that the split is actually changing, and I'm starting to have more private pay and fewer insurance clients. Something like that can help you visualize and understand the information. And if you have a process around it, you start it off, it feels unfamiliar. Over time, it gets familiar. Whenever I do a spreadsheet or create kind of my own little report, it's really helpful to have something that's visually appealing. Spreadsheets let you use colors, or if you create something in a Word document, create it so that it's visually appealing so that you don't mind looking at it. And also, so it's easily digested. So using colors or fonts or size of the screen, or having it all be on one page so that you can look at it and easily digest the information. That's going to be the most informative and really useful, because once you create kind of a template, then you just have to repeat it every month. Just like, oh, I get this information, I plug it in here, my little graph updates, and I can see where I stand. Another tip is scheduling it. So scheduling some time to look at your cash flow, at least weekly for the cash, and it could be monthly for doing some more in-depth analysis or looking at your accounting reports. You might want to do that monthly if you don't have access to that weekly because you use someone else doing your bookkeeping and they update it monthly. But most important thing is you may only need 5 minutes, especially once you've established a process, and it's just a matter of looking at it, pulling the information, plugging it in somewhere, thinking about it for a minute, and seeing if you're good or if you need to change anything. Maybe 10 minutes, but it doesn't have to be a significant amount of time such that you'll put it off and avoid it. So that's why we want to create a process that we're going to enjoy, but we also want to have a process that's fairly quick for a small business. The larger your business gets, the more time that you need to spend on it. But a small business, a lot of times, just a quick glance at your reports. Okay, I see where it came from. All looks good. I'm going to add an extra $100 to my savings. I'm going to pay myself this much, and you're set. But schedule it. Whether it's like the first Saturday of the month would be a good time to do it, or the first Friday of the month, or every Friday, or the 15th and the 1st. Pick dates that fit in with your schedule, maybe when you're doing other admin tasks anyway. And especially if you have a process that you've developed that you enjoy, then it's a good 5 to 10 minutes. Some people would be really helped by drawing out the process or making a list. So at the beginning, just say, okay, so my goal is to get this report from my EHR, look at this report in my accounting system, and ask myself these 3 questions. Draw that out in a little flow chart. Step 1, do this. Step 2, do this. Step 3, do this. Or in a list, a recurring to-do list, can be on a sticky, could be on your phone, something that tells you when I'm going to do this and I've set aside time and I have 10 minutes to do it, I'm going to do 1, 2, 3 things. Having that list to go back to, especially at the beginning, is really helpful to get the habit of doing it. So if you make a list, it can help you visualize the flow, how it's supposed to work, so you don't have to spend time remembering, and make it clear what you need to do. So you're like, oh, no, yeah, no, this is what I do. And then when you do it, you might go, oh, you know what? I have this other thing I want to do each time. Add that to the list. Plus, you're less likely to forget. It's really important at the beginning that you are reinforcing this habit of doing this. The other thing is, and I think this might be the last tip, is to evaluate. So once you've done this for a couple of times, doing it a couple of months, ask yourself, is this process working for me? Am I dreading it or am I liking it? Am I still feeling a little lost? Maybe I need to ask some questions of my accountant or my financial advisor. Is the reports clear and they making sense? Maybe I need to get some additional information. No single way works for everyone. And so having a process that really works for you is what matters the most here. Whether it's 30 minutes of gathering up information and doing some detailed analysis, or it's 5 minutes at glancing at your cash and your profit and saying, okay, yeah, I'm all right, I'm okay. Is the process working for you? So evaluate and then change the process till you get to the point that it does work for you and it's something you can maintain and do regularly. So that's what I have in terms of the sort of the information I wanted to cover. And don't know if we have time left, if you have questions.
Thank you, Jenny. That was very, very good information, digestible information, and straightforward. I think most of what you said is about making decisions based on your numbers, and looking at them proactively where possible, the weekly, the daily option, because, banks make mistakes too. And you come across things, fraudulent charges, and then a month goes by and you don't even notice it. But if you're looking at it daily or weekly, like, oh no, that shouldn't be there. Let's shut this account down, So it's about dedicating that time, scheduling it. Like you said, I was actually listening in on someone yesterday, and they scheduled a certain day of the week for finances, right?
Mhm.
For me, I schedule a certain day of the week for marketing and promotions, because if not, it doesn't get done. Right?
Right.
So I love the scheduling feature. I've been doing that and doing my best to stick to it. But yes, if anyone has questions, go ahead and drop them in the chat. We're going to wrap up in a minute or so, but I just want to kind of highlight a few things that Jenny covered, and about the savings portion of it. And I want to mention that for purposes of taxes, right? Because we're in the fourth quarter of 2022, fourth quarter fourth quarter quarterly payment is due January. But guess what? You only have till year end to do any tax planning, any maximizing deductions, etc. If you haven't done any bookkeeping or any type of record keeping all year round, now's the time, if not ever, to do it, right? So that savings account, you should be putting money in it throughout the year, so you're not surprised when you file taxes, so you're not overwhelmed with the tax burden year after year after year. The only way to get ahead of that is to know your numbers in advance, put that savings aside, don't touch it, pay in the taxes quarterly. You can even pay in monthly or weekly. You can make payments more than quarterly, just to throw that out there. If that helps with you not touching it, then do that. Right? So
Mhm.
I love that suggestion about definitely the savings account. And another point that was really key is knowing how much you need personally, because I come across a lot of practice owners and business owners in general who want to expand, but their business isn't making enough to even pay themselves what they really need, right?
Mhm.
And then that's when you get into debt and loans and credit cards and that stress. So know what your number is, your personal household budget. What do you need from your business to survive? Are you making that number? If
Mhm.
not, is the person you're going to hire going to increase your income enough that you can still make that number, right? So you got to
Mhm.
kind of outweigh and run those scenarios. Run those scenarios. If you're not
Mhm.
familiar with it yourself, you work with a professional like myself, like Jenny, to evaluate those decisions and make sure they make sense. Because definitely come across those who've hired too soon or pulled a random number out of a hat on how much to pay their therapists, right? So I'm sure you came across that, Jenny. I love, your combination of LMFT and CPA. I'm always amazed by that. And I know you're, focused in different areas now, but if you could share a little bit about, I guess your journey as we wrap up, from, how you transitioned and then how you support, practice owners now.
Okay, so want to go back to something you said about the savings and the having enough to pay yourself, and we didn't get into it today because we were going with the basics. But when people build wealth, it's because they live below their means, and so if you don't have enough to pay yourself from your business now, and you're kind of in a cash crunch, at some point your goal is to resolve that and then have your business making more than you need. And that's how people build wealth. When you start to make more, don't just go spend that more. start to save it, start to save for your future, save for the near future and the distant future. That's wealth building. And so, you know, you can take an extra vacation when you start to make a lot more money, but don't spend it all. So another thing is, so people often wonder about like, well, aren't like being a therapist and being a CPA opposite? And I'm like, no, actually, they're more similar than you would think, because I'm a marriage and family therapist, and we work in systems. So we're always looking at how things are interconnected and how they relate. And we look at processes, and then we look at boundaries and things like that. So in the accounting world, we have a very similar thing. We look at processes and controls. In the mental health field is processes and boundaries. So when I'm looking at, you know, whether I'm using my accounting brain or my therapist brain, I'm still looking at how do these things relate to each other from a solutions focused standpoint. You know, what can we do to improve this and make it better? And what I tell therapists a lot of times is that, especially ones who are freaked out by numbers, is like, if you can help someone figure out what to do with their drunk uncle on Thanksgiving while they're trying to heal their family trauma, you can understand an accounting system, because in an accounting system, there's a limited number of things that can go wrong. And in a family, there's an unlimited number of things that can go wrong. And you are dealing every day with the unlimited problems and issues. And this is like a limited set of things that can go wrong. And there's a couple good ways to check that you covered all your bases. And then we'll develop a cool, cute little spreadsheet for you, and you're going to be fine. That's way easier. So, you know, mental health professionals can give themselves some credit for how complex of issues they can deal with. Hey, I set aside some money, I pay my estimated tax. No, that feels complex because it's unfamiliar. When it becomes familiar, it will not be complex. So that's a little bit about me, how my brain works. But other than that, I have a business called Simple Profit. I help small business owners understand basics similar to what you do, but I don't do taxes. So go to you for taxes. And I fill in the gaps when people don't have a you. So when they have someone maybe to do their taxes, or they're doing their own, but they just need all that other information, I help with all that other information. I help people understand bookkeeping, taxes, and business analysis. And I create tools and spreadsheets for people to use in their business to help them make decisions. And so my website is simpleprofit.com. And then I'm also a therapist in Pennsylvania.
Awesome. Thank you so much, Jenny. I love that comparison, and it's true. When it's unfamiliar, I feel the same way. When going into anything new, it's going to be uncomfortable until it's comfortable, and so it's just a matter of getting that guidance and coaching along the way, so you're not figuring it out on your own. So this was a great session. Thank you again, Jenny, for taking time, you know, to speak to the audience today, and for everyone who joined us, and maybe if you came in late, I'm Safie Russell, founder and CEO of SDR Consulting, and we focus on tax, accounting, and consulting for business owners, especially those in the mental health profession. You can find me online at sdrconsultinginc.com and on social media at SDR Consulting. And I definitely look forward to having you back for our next Business Basics Friday session. We're here every Friday, 12 o'clock Eastern. So set your reminders, share with a friend, and definitely connect with Jenny and get those resources, especially if you're a new business getting things going and you need that support. She's amazing. All right, everyone, have a great Friday and enjoy the rest of your day.
Thanks so much.
Jenny.